The beginning of spring is a reminder that the year is moving forward, and indeed we are heading rapidly toward the second quarter of 2024. U.S. equity markets have mostly moved solidly higher in 2024, and the widely followed large company S&P 500 index established new all-time closing highs in January, February, and in March. We attribute equity market gains to improving inflation trends throughout 2023 and better than expected economic growth despite higher interest rates engineered by the U.S. Federal Reserve Bank, or Fed. And in recent months, the equity market has seen an additional catalyst as well, as investors anticipate lower interest rates as the Fed eases its policy. Debate on the health of the U.S. economy has evolved over the past 12 months. A year ago, we saw the potential for a dip in U.S. gross domestic product, which would be negative GDP growth or a recession, but the labor market, wages, and consumer spending remained robust, elevating the view that the Fed could engineer a soft landing. We define a soft landing as GDP growth that slows, but most likely stays positive, but could be lower than 1%, which is well below the economy's long-term trend. But the second half of 2023, GDP growth exceeded 3%, and the Fed at its March Open Market Committee meeting projected 2024 full-year GDP growth of 2.1%. So now we might hear the term no landing, which suggests economic growth that's back on trend. No landing is better than a soft landing and explains the continuation of elevated investor sentiment. A condition of solid economic growth and lower interest rates can be good for equity prices, and a no-landing economy should be good for cyclical sectors, as revenue and earnings in sectors more directly exposed to the economic cycle can benefit. This includes sectors like industrials, financials, materials, and energy, each of which has seen solid performance in March. While risks remain if the labor market stalls, inflation gains reverse, consumer confidence slips, or if long-term interest rates remain elevated, we see opportunity in diversified portfolios with some cyclical exposure. For specific recommendations and strategies, please contact your D.A. Davidson financial professional.